Well, Tesla is the big name on tomorrow's earnings calendar, so let's get you set up ahead of those results tomorrow with Morningstar senior equity analyst Seth Goldstein, who has a sell rating on the stock and joins us now. Seth, it's great to have you on. Why do you have a sell rating?
Well, we think the market's gotten a little too carried away with enthusiasm for the robotaxi, and we're skeptical that we'll see a full launch next year, meaning the robotaxi will be launched without safety drivers in the car and when without any parameters or geofencing in the areas where they operate. We think it's still a few years away because the product's in early testing, and so yet we think the market's pricing in Tesla surpassing Waymo and starting to take some of Uber and Lyft's market share in the ride-hailing market.
Yeah, I mean, there's a lot of focus on robotaxis. There's a lot of focus on robotics, even though it's probably even further away. So what are the metrics you're going to be watching tomorrow when it reports here on Overtime?
Well, I really want to hear what the plan is for testing beyond safety drivers. I want to hear what management's timeline is, when they think they can start to progress from an early stage testing where they need all these safety metrics with the drivers, with geofencing, to a more advanced testing where you can remove the safety drivers and just let people take a robo-taxi ride, similar to what Waymo offers today. So that's really what I'm going to be looking for, is the timeline for robo-taxi testing.
But Seth, does this stock even really move on fundamentals? I mean, it's back near that $500 share level where it was beginning of the year, end of last year. Its lows were more in the, Trump having trouble with Musk period. I mean, shouldn't investors be careful about assuming that because Elon Musk doesn't deliver promises on time, the stock's going to go down? I mean, he's got a long history of not delivering promises on time.
He is, but I think this time is a little different because we started to see tangible progress on robotaxi. It's gone from a concept to full testing now, where it's in multiple cities and they're working on bringing it to full launch. And so if we see this continue to be delayed, if we see any incidents, any safety incident that would cause a pause or a delay in testing, I think there's a lot of optimism in the stock and that would quickly disappear.
What is the monkey wrench that could get thrown in your plan here, though, even if they fail to deliver on robotaxi? I mean, they got robots, they got the power stuff. There are a lot of other things that Elon Musk seems to have the ability to turn people's attention to.
Yes, well, there's a lot to like about Tesla, and I still think that they'll be successful ultimately in rolling out robotaxis. I think they'll be successful with the Optimus humanoid robots, but I just don't think it's going to generate the positive and strong free cash flow that you would need to assume, and the strong growth rate you need to assume to justify a stock price in the mid $400 range like we see today. So I think if we see a delay in products, and if we see Optimus production is not able to reach a couple thousand robots, if they're not finding the use cases in the factory, if we see a slowing growth in the battery business, then all of a sudden you start to see a lot of the growth drivers start to disappear for Tesla, and I think the market would react accordingly.